Hi, this is Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. Well, if you're watching this video as opposed to listening on the podcast, you'll see that again this week I'm on location and in the centre of Cardiff. Been doing some business planning today with some business colleagues for 2015, and I thought I'd report on this week's bulletin in the outdoors. But of course it's the end of November, so it ain't off chilly, so this is going to be a relatively short bulletin this week. So what have I got for you? Well, I've got news on crowdfunding, I'm going to be looking at bank lending, and also going to be in my business tip of the week at look at actually why small businesses don't want to borrow. So let's start with crowdfunding. I've mentioned in previous bulletins about how popular it is, and particularly a report carried out recently by Nesta, which showed that for 2014 it's estimated that about £1.7 billion is going to be raised through crowdfunding. It's further estimated that by the end of 2015, that amount will probably total about £4.4 billion. That's a significant sum and a significant increase. But many businesses still don't know what crowdfunding is, or more importantly, how to access it and how to get pitches together, etc. Well, some good news in that in 2015, some crowdfunding hubs or advice centres are going to be launched, called venture funding hubs. These are going to be free advice drop-in centres. Now, the first of those is going to open in January 2015 in Sheffield, and throughout 2015 you'll see other ones opening in Liverpool, Manchester, Leeds, Newcastle, Edinburgh and Glasgow. So if you're sitting there wondering how can I access crowdfunding and how on earth can I get a pitch together and how it all works, keep an eye out for these advice hubs which will start to open. Check out your local press, or of course don't forget, just drop by this bulletin and I'll be sharing the news of each of those centres as to when they get open. So that's good news if you've got a bit of a blind spot where crowdfunding is concerned. Now, what about traditional bank lending? Well, figures out this week from the British Bankers Association show, perhaps not surprisingly, a continual drop in the total amount of money currently out there lent to UK businesses. As at the end of October 2014 compared to the end of October 2013, the total stock of money out there dropped by just under £14 billion, which is a 3.3% drop year on year. Now that may sound bad news, and yeah, it is, but to be honest with you, look at the figures, real estate or property development actually has accounted for quite a large amount of that drop. And in fact, we're beginning to see that new monies are going out to manufacturing and retail organisations. So whilst overall bank lending is contracting, there are some sectors that are beginning to benefit. But what about banks generally and their appetite to do business? There's another report out this week from the Association of Chartered Certified Accountants, the ACCA, and they did a global survey amongst its members about attitudes to raising finance generally. And the accountants gave the message back, perhaps not surprisingly, that it is still tough for businesses to raise money. And one of the key findings and the key message for banks, what came out of this, is that banks still want to see what they perceive to be risk-free deals. Now, what's risk-free? Because risk-free for a bank really is a proven business model, that the business is profitable and that there is security available. And so the ACCA and its members are saying to banks, this economy is not going to grow if your only criteria is it risk-free? So if you're looking to put a deal together for a bank, just think about how you can mitigate the risks there. What can you do to de-risk it for the bank? And don't forget, of course, as I've mentioned, there are plenty of alternatives out there. So let's see what we can do to try and make it less risky for banks, to try and help you get that business finance that you need. But what if banks have said no to you? What are the alternatives out there? Well, it's interesting about demand for finance generally. Now, as I record this, just literally this day, there's been a latest quarterly report called the SME Finance Monitor Report. So it's a quarterly report, excellent overview of what's going on in the UK finance sector. Now, I'm going to have more detailed look at this in next week's bulletin, but the quick flick that I had through today, it's going to be one key stat that came out of it. It said that 68% of UK businesses saying that they actually want to concentrate on reducing their debt levels. They don't actually want to borrow that much money. Now that's counter to everything that we're hearing in the media. And this links in nicely to my business tip of the week as to why businesses don't want to borrow. Now I'm going to show a clip that I actually did in the last week for a session I did for the ACCA, which I just mentioned previously. Group of accountants bodies that I did a session for in North Wales. And this clip is actually taken about why businesses don't wish to borrow. And it's taken from a recent SME Finance Monitor report in mid-2014. So let's go to that clip now and just listen. Does any of this resonate with you? So why is it that SMEs then are not borrowing? Why is this lack of appetite or lack of demand? Why is it? Well, again, let's go back to this SME Finance Monitor report, which looks at this topic, and it asked those business owners who are not borrowing, hey, why are you not borrowing then? What's the problem? We're hearing all of this negativity that nobody's lending money. Why aren't you wanting to borrow? And here's a bit of a sting in the tail for the banks as well. First of all, 9% of them said, well, we don't want to borrow because we've got a concern about the economy generally. I think that's right. This was to the last quarter, to June. But since then, we say over the last 3 or 4 weeks or so, we've heard messages coming from government that they're concerned about the way the economy is going to go over the next year or so, with impact on Europe and global positions generally. And that does put a lot of people off. We start getting wrapped up in this area of negativity. So just under 10% of them saying they're not really sure about where the economy is going, and that's the reason why they're not wanting to borrow. Another reason, 15% of them say they've just got an issue with the principle of borrowing, full stop. And this is back to these permanent non-seekers of finance. Not interested. They just do not want to borrow. Perhaps they got stung during the boom times and ended up with a massive debt, taken to court, whatever it may be. They just have a problem with the concept now of borrowing. 37% of them, and this is where we've got a message for banks here, 37% of them are saying that they've been indirectly discouraged from borrowing. In other words, they've picked up the newspaper and what do they see? Negativity. Banks aren't lending. Okay, well, if banks aren't lending, what's the point? Why should I bother going? They're only going to say no, so there's no point. So we've got to get this message out, and those of you advisors in the room here, we've got to get over this negativity that business owners have, because as I said at the beginning, if we're not careful, we're going to end up with another spike in insolvency, because business owners here who are being indirectly discouraged and have a concern about the economy, if they firmly believe that they're not going to borrow money and they don't want to borrow money, they are not going to grow. And if they try to grow, they're going to get into problems because they will run out of cash and they will just grind to a halt. So as advisors, we've got a duty to make sure that business owners understand you've got to get out of this mindset. Yes, you can grow organically, but there is this difference between good debt and bad debt. Good debt can actually facilitate growth. And the real kicker for the banks is just under half of them, of those businesses surveyed, said that they've got an issue with the borrowing process. And that's the reason why many of them don't bother, nearly half of them, because it's hard work. So, are you one of those businesses who don't want to borrow? Yeah, if the key thing is that you just don't like the process, get help and support. Yeah, give us a call, drop us an email at info@businessloanservices.co.uk and we can give you a hand. So that's it for this week. Time to go because it's getting a little bit chilly. As ever, I hope you enjoyed this week's bulletin, and please share it amongst your colleagues if you found it useful. So that's it for this week. I look forward to being with you again next Friday, and in the meantime, have a great, successful and profitable week. Bye-bye now.